What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, I will be giving you guys an update on the S&P 500 index, and we will identify some of those key support and resistance levels going into next week. And where do I see the markets going generally, and what happened today? So the markets essentially got rocked. The S&P was down close to about 2.5%. There was a lot of weakness throughout the day. But before we jump into the pattern, if you guys enjoyed this video, please make sure to drop a like because it really helps out with the channel and recommends this video to other people who might be interested in watching as well. Also, subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. So I posted a video about a few days ago essentially going over that the pension funds are going to be offloading some of their stock positions and rebalancing some of their portfolios due to the fact that the market has gone up over 21% in the second quarter of 2020, and we could potentially see an increase in volume. So this right here is the T-vol indicator, the total volume indicator for the New York Stock Exchange. So last Friday was the quadruple witching Friday, when most futures and options contracts expire and there's usually a spike in volume, and on that day the volume spiked close to 250%, so you guys can see right here, and we traded close to about 3.5 billion shares. So now, coming in from last Friday, I had a couple people comment on my previous video essentially asking if I do see another volume spike for the T-vol, and I essentially said that for the S&P 500 in general, the ETF, the SPY ETF, I do see the relative volume being a little bit more this week, but for this T-vol indicator, it's a little unlikely that we might see another volume spike. Well, today we did see another spike close to about 3.1 billion shares traded, which was a jump of 226%. So the daily chart is not updated right now, so if you go over to the 4-hour chart, you guys can see how this is all the way up, similar to last Friday's volume, close to about 3.1 million. So this really represents a lot of shares exchanging hands, and since the market did go down close to about 2.5%, that goes to show that most institutional investors and pension funds, essentially the big money, they were more on the bearish side of the trade today. So if you go over to the indices, you guys can see Nasdaq down close to 2.6, S&P down close to 2.4, Dow Jones close to 3%, and the futures again were down more than 2%. So now we're going to jump over to the S&P 500 index, ticker symbol SPX, and we will go over the daily chart, and then we'll also look over at the 1-hour chart. This right here is going to be the daily pattern for the S&P 500. Now, the main concern, the main reason why the market essentially dropped today was because of the virus. We are seeing a flare-up and resurgence in states like Florida and Texas, and essentially we are back to the same level as we were back in April in terms of the daily cases that are marginally growing each day. So that is definitely a thing to be concerned about without having a vaccine, and how these reopenings are going to take place moving forward. But that's again a different story. In terms of the consumer spending and the personal income dropped in the month of May, and consumer spending was higher in the month of May. So earlier we've seen the opposite. The personal income was much higher due to all the government benefits and the stimulus payments, and consumer spending was much lower in the last few months, which essentially drove the savings rate for the American people to an all-time high of 33%. But that being said, we did see those things switch around. Personal income was down and the consumer spending was much higher, but none of those things were priced into the markets at all. The only thing the market was worried about today was the increasing number of cases in the US. So looking at the pattern right now, this again is going to be the daily pattern. The interesting thing to note is that it was making higher highs and higher lows up until this point, as we have identified previously that it was bouncing off of these levels, and then now it's broken below that level. So it's a very key support that the S&P has broken below, and we will go over some of those key support levels and where do I see the next support to be. But before we do that, I do want to address the idea of dip buying, because we have seen that happen multiple times. Obviously, there was a huge dip buying opportunity back on March 20th when the market essentially bottomed out. But then moving forward, when it did bounce off of this level, again, presents a really good buying opportunity right here. And then when the market pushed up and then pulled back to this higher low, again, this represents a good dip buying opportunity, and so on and so forth. Right around here on June 12th, the market pushed up, but then it started consolidating and then pulled back. So this right here is going to again be a retest whether people are going to be seeing this as a buying opportunity or if they're going to continue this sell-off going into next week. It'll be really interesting to see where the market opens next week, but for the purpose of this video, so I wanted to kind of highlight this idea that earlier the market was making higher highs and higher lows, and this right here is the first time that the market has essentially started to make lower highs. So it's not going as high as it did the previous time, and at the same time it can potentially be making lower lows if it does drop down to this level. So this right here is going to be the key gap if the S&P 500 actually fills up, or if it's going to hold its support at 3,000 level, which is going to be kind of like the bull camp which we have recognized in previous videos, the 3,000 level acting as a really good support, and we will highlight those support levels in the 1 hour chart. But I wanted to kind of show you guys this range within which the S&P has been trading for the last few weeks. I mean, 3150 being a very clear resistance. We have highlighted that not just on the index but also in the futures market. 3150 being a very clear level of supply for the S&P 500, and then the 3000 level being a really compact bull camp and a lot of demand at that level. So it'll be interesting to see if we actually break down of this level. If we do, I do see the pattern pulling back down to this level right here, which is going to be 2950, so down 50 points, which can potentially result in the S&P dropping close to about 1 to 1.5%. And the reason I say that is because this level has previously acted as a resistance right around here. So if you guys were to look back as far as May 11th and then also going further back last week of April, you guys can see that the S&P did push up to that level and then got rejected not once but twice, essentially creating a double top right around here before consolidating on that level and then gapping up. So if it were to pull back, I do see 2950 being a really good next key support level. But again, it didn't break below 3000 right now, so I still hold my 3000 level as a very good support due to the fact that there has been a pretty good demand right around this level. So now we're going to jump over to the 1 hour chart and we will highlight some of those key levels here. Let me go ahead and remove all of these. So as I was saying earlier, that it has been making lower highs now, so it's starting to a point where the pattern is changing direction because it was making higher highs and higher lows since March. And so yesterday when I was trying to understand the S&P 500's direction and where can it potentially go today, I highlighted this as being the resistance and the next resistance being at around 3120, I think is what I mentioned. And I was thinking about a minor push up close to about 1% to this level, to this next resistance, which made sense due to the lower high. But what I did miss out on is this right here was the resistance based on the fact that it was getting rejected here, and then if you were to come down, it got rejected here, and then if you were to come down, this is where it got rejected at that lower high. So now moving forward, if we were to identify some of those key support is going to be same at 3000, which it has validated multiple times here in June 12th, June 15th, right around that level. And then moving back further down here, you guys can see that it pulled back and then it pushed up, validating that 3000 level. And the resistance stays at 3150 right around this level. So next week, I still see the pattern pushing up, validating this 3000 level, provided that there is some support at 3000. Again, if it were to breach this 3000 level, then we can see the pattern go as low as 2950, which I've already mentioned, which is going to be the next key support level. But I don't see that happening next week, or even if it does, that's as low as it's going to go in my opinion, because there has been a lot of selling activity and a lot of aggressive sell-off. And I'm also thinking about the fact that the Fed is going to utilize their tools and they're not going to let the markets collapse in a way. Again, that's just my opinion and where I see the markets going next week. We are still in this consolidation area. We are just coming back from its resistance at 3150. Now, so based on previous patterns, it has validated this 3000 and that's where we are right now at 3009. So it did go as low as 3004, but then it pushed up a little bit during the end. So moving forward, I mean, we could see pattern pushing up close to about 2% to 3060, which is going to be its lower high. So I hope you guys enjoyed my quick technical breakdown on the S&P 500 index. To give you guys a quick recap, 3150 stays our very clear resistance and a huge level of supply. 3000 being our very key level of support. So this right here is going to be the bear camp, and this right here is going to be the bull camp, and that's where we've been trading for the last 2 weeks. So 3000 to 2150, this range right here is where I personally would be placing some trades, because I do see this as a good buying opportunity for myself. Like I said, next week I do see the pattern pushing up a little bit, close to about 2%, to revalidate this lower high at 3060, and then eventually breaking out of that level to maybe highs of 3150 to retest that level of supply and see how much the bears can hold the bulls down. Let me know in the comment section down below, where do you guys see the markets going? As always, if you guys enjoyed the video, please make sure to drop a like. It really helps out with the channel and recommends this video to other people who might be interested in watching. As always, happy investing, and I will see you guys in the next video.